Okay, let's talk market fundamentals, and let me now bring on board Shashank Khade, Executive Vice President, Portfolio Management Services with Kotak Securities. Shashank, morning. Thank you for joining us. Shashank, it's looking nervous, the sentiment is brittle, and the center of gravity has shifted from Greece to Spain. So fund managers, I guess, they are just throwing everything from bond, commodities, equities, emerging market equities, and now even currencies.
No, I think over the last 2 years, we've been going through these severe bouts of risk aversion. December was quite acute, and in fact, if you look at July to December, was the longest sort of risk aversion phase which we have gone through. Again, this looks to be a repeat of what we've really gone through. A part of July to December, and again the issues are the same. It's all about Europe not settling down because of these issues again resurfacing. So I think the Greece election outcome still remains a very important event to look at, because that would finally decide where would Greece be within the euro or outside the euro, and finally what happens to the euro. So I think there is going to be a lot of uncertainty around this event, and clearly Spain is adding further uncertainty and risk aversion to this entire issue. I think the issues still remain the same. If you look at last year to this year, I think the issues still remain the same. The risk aversion remains high. Out here in India, it's domestic investors are absent. So whenever foreign investors are looking at reinvesting back in emerging markets or in India, we have a direction in the markets. Other than that, the markets really remain directionless.
Shashank, do you think for Indian markets to bottom out, the biggest indicator is currency? And till the time rupee will not bottom out, we can make an endless value argument. We can endlessly talk about how attractive mid-cap stocks are looking. Indian markets will not bottom out.
No, I think this year the silver lining on the dark clouds clearly is that commodities are under pressure. And I think the last 2 to 3 months, because of this global uncertainty, again we are seeing crude oil prices correcting drastically. You already at a fresh low in the Brent, as you are seeing right now. Whatever risk aversion you're seeing, we've actually seen a 3% drop in Brent last night. So I think this is something which could be positive. Of course, one needs to see the trend, whether it remains here or bounces back again. But I think there is to be, the eye has to be on the discount, on the premium of Brent over, WTI. I think that difference is also going to be quite meaningful. Further commodities, ferrous, non-ferrous under pressure is also good for user industries. So from that standpoint, if you look at, the pressure on, inflation, be it, thanks to the commodity inflation, I think that's something which is going to be relatively low this year. Last year to this year, if one were to look at, I think clearly the interest rates were going up. This time around, we're seeing interest rates having topped out and possibly may remain, high, but, may trend down over a period of time. So between the last 2 years, last year and this year, I think this year looks slightly better on the macro front. On the earnings front, clearly I think there is going to be pressure because of deceleration in our economic growth, and you will see that getting translated in the next 2 quarters, numbers for a number of domestic centric companies as well. So I think it's going to be tricky this year. It's going to be much more stock specific rather than what it was last year. Last year it was at least the consumption side of the story which gave you an upside in absolute terms. This time around, you're seeing consumption related companies price to perfection. On the other hand, you're looking at the capex or infrastructure stories not really being seen in the wanting at all by any investors. So it's quite an acute situation right now. But my sense is that as government starts moving on on the reforms and commodity pressure comes off, I think it's going to be a big positive for the Indian markets.
Would you classify names like SpiceJet and Jet Airways as good contra bets? Because if crude prices they correct, if rupee-dollar equation, or if rupee appreciates against the dollar, airline companies could hit a jackpot.
Yeah, I think airlines, A, of course, is a difficult business, and B, given the way the oil has moved and the pricing power, they can't really pass it on to consumers as much. It's been a difficult business, but the stock prices are reflecting most of the negatives in the business. I think FDI, if it happens in airlines, will be still a big positive for the sector, and as more foreign capital actually comes in. Right now, if you look at the survivors are actually going to take it all. So I think these sort of companies, if they continue to operate efficiently, I think there is still a strong business case for such companies.
Shashank, just want your thoughts on the Q4 GDP data, and do you think sub 6% figure for the fourth quarter is going to actually scare the daylights out of equities as well as people on the street?
Yeah, I think the sentiments are already sort of weak, and these sort of numbers will further sort of weaken the case. But if you look at equity markets are ahead of these sort of announcements. The earnings of companies also show you that there is a deceleration in certain pockets of the economy. So all of this is actually getting factored into the markets. But on a particular day, if the sentiments are bruised, you could possibly see not too much support in case if the numbers are weaker than what is expected. So there could be some sort of sentimental impact, but that could be temporary. But if frankly speaking, I think the earnings are really clearly discount these sort of decelerations ahead of time. So we would be discounting the deceleration much ahead as compared to the actual numbers when they come out.